Okay, today is December the 10th on Tuesday, 2013. It's about midday, coming up on 2 o'clock Eastern. And I just wanted to send out this video as a public distribution since the last one I sent out and kind of go through some of the trading and some of the trades that we made, showing our levels and how they build a framework for what we do. This is our daily trading plan that I send out each day, and it marks the areas that are important to us and what we're going to look for to place our trades. And these represent areas of support and resistance. Now, obviously, these are going to get violated all the time, but they do provide for us a way in which we can frame up our trades. And up in here, we were looking to buy the puts, which we did. And this is I think I included in the last video, so let me just scroll forward a little bit, where we were short here early in the month in December, and we worked our way down progressively. And basically, during the course of the day, we create for ourselves these positions on both sides of the market. So the market can finance our position, and one will offset the loss of the other, and we'll end up with a net gain very consistently. But we use these areas as a framework, and you can see that down here at 1780. This was an area of significant support, and you see what this market did in and around these areas. Very, very sloppy, very risky to trade in the futures. However, we were able to participate successfully in here using the options. And so you can see here that we always have an array of areas for consideration, and the one under this where the market just barely reached down into the 778 even area, in fact it came within one tick. Now that's not as important as just recognizing the price action between these areas. I mean, there's between 1786 and 1778. That's a pretty wide range in there, and you can see how you can really get twisted in here with the futures. However, recognizing this for what it is, and that is very briefly spending a little bit of time down here and then coming back up. They tried to run it down, they squeezed some stops, and the market came back up, and it created a base in here in which it came up to the upside from there, which we were able to recognize and have a bias to the upside. Now, I still had puts in here that lost, but the calls far grossly outperformed the puts, and so I always try to be hedged up somewhat, but again, the market will finance what we do. Now, I think it's important also that, you can look at these lines after the fact and then say, it's pretty easy to draw lines. Well, let me go back to the site, direct you down. If you could revisit esoptions.com, scroll down to where it says video archives. I've placed in here a couple of hot links, and it will take you to some of the trading plans and some of the charts that we were showing early in the month. And you will see those same levels that are guiding us today on those videos and on those charts. And so they are long-term based, where these markets will revisit. They'll either lend themselves as support or resistance, but they are important levels. And so just looking at the 1786 to 1778 area, if I just compress the data here, just for the purpose of making my point, you can see how these areas were presented before in these markets. So it's not a function of just drawing these lines. These are areas of extensions and retracements that were confirmed by previous market action, and they continue to be important for what we do now versus what we did back in November. So these markets will often revisit these areas, and so during the course of the day in real time, we look for confirmations in around this area, and we often find that the market gets kind of dicey in here, and that's where we try to put our positions on. And again, we try to position ourselves on both sides of this market. So very important. Go back, look at those videos. You'll see these areas in here. And if you do the trial and subscribe with us, you'll see these same areas in our daily trading plan each day. So during the course of the last couple of trading sessions, we have had a bias to the upside, which we were buying calls right on up to the 1812 area that we've been discussing here for the last 6 weeks. When we got up around this area, we were able to take our call positions off and establish a put, because we're recognizing that this 1803 area could be somewhat supportive. And so we're looking for this, perhaps this range to come into the market. And we participate in just that way by buying strangles to achieve a position of a neutral delta position, but financed by the market, which means I took the calls off up here and established puts. We came down a little bit and I established calls here. Now here we are trading in real time and we're wondering whether or not this area is going to hold or not. So far this is the area that has to get violated to the downside. But what do I have? I have both calls and puts on that are financed by the market. So it doesn't matter to me which way it goes. I'm going to profit either way. If this thing stays sideways for the next week or so, I won't make any money, but I'm not going to lose. And what are the chances of this thing just staying here for the next week? So again, our website is esoptions.com. If you'd like to take a demo, we'd love to have you. If you just click the request demo button, it'll ask you for a few key bits of information. Be sure to include your Twitter ID so I can send you alerts out in real time. Each morning you'll get the daily trading plan, and after a while you're going to know in advance what we're doing with our positions and how we're able to achieve consistent profits.